Hey, my name is James Baker, and thanks for being here. This question comes from our Ask Me Anything. We have a private, well, it's a public Discord server where every week, once a week, I answer all the questions that you guys have. So if you have questions about international taxes, investments, business, marketing, sales, all that fun stuff, mostly, specifically U.S. income taxes and sales taxes. I encourage you to click the description below, join the Discord, join the Telegram, and come to our next call. If you just want to see the video and see the answer to this question, you have a great video coming. So just subscribe to this video and let's go straight to the question.
That I want to know is an LLC tax as a C corporation the best option for my Amazon business? That's the question I want to answer first. You didn't ask it, but I'm going to answer it anyways because you have the option to use an LLC and not pay any US taxes and only deal with your taxes in Kazakhstan. And by the fact that you live and run your business in Kazakhstan, you still already have some tax exposure in Kazakhstan. In this case, I would recommend potentially an offshore structure using a Cayman Islands company that owns your LLC in order to avoid paying tax in Kazakhstan. Most of the countries in the region of Kazakhstan, out there east, are you don't pay taxes on money you don't bring back to the country. So what I would recommend to you is reconsider your operations, potentially revoke your C Corp election, and make as much profit as you want without paying any taxes in the US. Or make a new LLC. That's what I would recommend to you and all of your contemporaries. You don't need a C corporation or an LLC elected to be a C corporation to operate on Amazon at all. And if you have a C corporation, you're going to have these problems where you're paying taxes. So again, I have many clients who are using single member LLCs or multi-member LLCs to operate in Amazon, sell a lot, and they pay zero income taxes in Amazon, and Amazon doesn't withhold taxes, and there's no problem. So my first recommendation in your situation, sir, would be to reconsider your tax strategy and revisit it and potentially schedule a call with us so that we can go into your situation in detail. That's like the first question, and sign up, keep and ask me another question, the AMA. If you're in here in the chat, Daniel, send me a text about it. And to the next point, how is inventory treated and deducted on a C corporation tax return? That's the follow-up question here, and that's what I'm going to answer right now. If you have a cash basis taxpayer and sales under 1 million, it's considered a small business corporation. Again, I'm not researching anything. I'm not reading a citation, but if the sales are under 1 million, it's either 1, 5, or 10 million. I don't know the answer here. Let's go in Safari. If the sales are lower than, if it's a small business corporation, then you can expense inventory as you pay for it. The laws surrounding the support of this position are complicated, and it's a gray area, but I've done it for clients. I've worked with clients. There's literature on it. The position's been taken, and if you're a small taxpayer, the audit risk is really low. And the concept is that when you're a cash basis taxpayer, you can deduct your inventory when you pay for it. It's only when you surpass small business corporation sales threshold, USA IRS. No, I don't know that. I don't know the definition. I think it's 1 or 5 million. Can I deduct my inventory purchases for my C corporation? See, generally, this is the position. Inventory is not a deduction. You buy something and it's not an expense until you sell it or you dispose of it. So generally, your accountant is right that you cannot deduct inventory until it's sold. However, if you're a cash basis taxpayer with sales under, again, $1 or $5 million a year, then you can deduct it, and we can set it up to take that position so that you are using it as a deduction for your taxes. Yeah, this isn't useful. Okay, I have the research done somewhere else, but that's not really the point. Um, However, if you cannot, if you're the accountant you're working with doesn't want to deduct the inventory, then you have to pay tax on it, on the profits, because if you if you can't deduct it, it's an asset. That means you don't have the expense. That means you have the profit. That's just how the numbers work out. And we I understand your position, but if it's an accrual-based corporation, technically your accountant's right. I mean, it looks like it's right because on the accrual you deduct stuff as it's expensed. But if it's a cash basis business and your sales are under one to five, I think it's $5 million average over year over year for the last 3 years. If your sales are under that, you can maintain cash basis status. Or you can avoid it altogether by using an LLC instead of a C corporation. It's an LLC C Corp, and just not pay any taxes. So that's what I would ultimately recommend. So
Hey
this is a
there.
good
I
one.
really hope you enjoyed the video. If you want more of this stuff, make sure you like and subscribe. And if you want to interact with me personally and join our weekly free calls that we have on the Ask Me Anything on Thursdays generally, click the description below and join the Discord and join the Telegram. I look forward to interacting with you and helping you grow your business, be more successful, and make more money.